Hey everyone, it's Dilin here and welcome back to Markets on the Move. So let's dive right in. Actually, since last Wednesday, a bunch of markets, including Forex, oil, gold, and you name it, have been on the move, showing some pretty clear trends. So in today's video, I just want to shine the spotlight on one of the hottest assets out there, the US dollar index. So now let's quickly rewind and check out what's been happening with the dollar index lately. Last Wednesday, it broke through the highs we saw in early April, closing above the 105 mark and hitting a fresh high for the year. And it didn't stop there. The last day, it climbed even higher, closing above 106. The bullish momentum is still going strong, but if you take a peek at the RSI, you'll see that the US dollar index has hit the overbought territory. So now you're probably wondering what's driving this sudden surge and how long can we expect this rally to last? Plus, is there any key data points we can keep an eye on? Well, no surprises here. I mean, the US dollar index rise was pretty much expected. Just look at the US economy. The latest non-farm payroll report showed a stellar increase in the job numbers, and the retail sales figures released yesterday also blew past market expectations. And both manufacturing and services PMI are in the expansion territory. I mean, look at it. Basically, everything is pointing towards a healthy US economy with no signs of slowing down at all. However, the CPI numbers have been beating expectations for 3 straight months, with the super core inflation shooting up to 4.8%, its highest level for almost a year. The Fed's been hoping for some extra confidence in the inflation hitting that 2% target, but as we can see, it looks like they'll have to wait. So long story short, the Fed doesn't really have a good reason, or I would say strong motivation to cut rates anytime soon, given that strong economic data and the stubborn inflation. In return, the market just pushed back the timing of the first rate cut from July to September this year, only expecting around 50 basis point cut in 2024, even lower than what the Fed was thinking back to March's meeting. At the same time, the 2-year Treasury yield is sitting pretty above 4.9%, while the 10-year real yield is still above 2%, giving the US dollar index a nice boost. And let's just not forget about the upcoming US presidential election in November. I believe no one wants to see a big drop in the dollar assets before then. So that's another important tailwind for the dollar index. And now, compared to the fast cautious approach, other G10 economies like the Eurozone, UK, Canada seem to be considering the first cut as early as June and by higher basis points throughout the whole year. And when you look at the fundamentals, the US is clearly outperforming. So whether you are looking at the interest rate spreads between the US dollar and other G10 currencies, or the unique strengths of the US economy, it's pretty clear that the dollar index is going to keep on climbing for quite a while. Meanwhile, the currency pairs like Euro, US dollar are feeling the heat, slipping below the mid of February low at 1.07 last Friday and hovering just above 1.06 at the moment. And the escalating geopolitical tensions also provide significant short-term boost to the US dollar index. Last Friday, things heated up between Iran and Israel, with the Middle East boiling over and the Russia-Ukraine conflict still simmering. Investors are just ditching stocks and loading up on safe havens like gold and US dollars, pushing the index even higher. So in a nutshell, with the Fed holding off the rate cuts, the US economy is still strong and geopolitical tensions on the rise. It's no surprise that the dollar index is on the up and up. But keep an eye out for those sellers. They're still betting on the Fed to cut rates on June or July. So mark your calendars for the 2 CPI and PCE numbers before the June meeting. Because if inflation starts to cool off, we might see the timing of rate cuts brought forward again, which could knock the US dollar index down a peg or two. So that's pretty much my take on the recent surge in the US dollar index, but I do want to hear from you too. So drop a comment below with your thoughts. And if there's any other assets you are interested in, please just let me know. I might just record a video about it later on. So yes, that's all for today. Stay tuned with Pepperstone for more insights and updates. I'll see you in the next one.